The November US elections were transformative. Will we say the same about the German federal elections in 2 weeks? Why does Elon Musk say that Germany, the third largest economy in the world, needs to move beyond its guilt about its past? Why an unsuccessful political gamble last week by the main German opposition party may have cost Germany a precious opportunity to make a decisive break from failed policies? Should you be investing in German stocks or buying the euro right now? We're barely a month into the year, but it is already pretty clear what kind of year 2025 will be. Everything is pointing to a year of heightened, if not extreme, policy uncertainty. The Global Economic Policy Uncertainty Index, which spiked in December, is now at its higher level since the height of COVID. Even during Donald Trump's turbulent first term, the index was never remotely as high as right now. Policy uncertainty raises risk to economic growth, as it tends to discourage household consumption and business investment. A new IMF study argues that these effects can also be amplified by high public and private debt. My guess is that we will soon see the impact of the big jump in global policy uncertainty showing up in economic data. The decline in the JP Morgan Composite Global Purchasing Managers Index in January, for the first time in 4 months, could be a harbinger of what's to come. Some people take heart in the fact that manufacturing output and new orders moved back into expansion territory in January. I'm more skeptical, only because the data are likely flattered by the fact that many American companies were stocking up after the US elections to get ahead of Trump's tariff war. My gut says that the pickup in global manufacturing activity will be short-lived. I am inclined to give more weight to what is happening in the service sector. In this respect, I see the slump in the global PMI for services in January to the lowest level in a year as a clear sign of trouble ahead. Economic performance varied across countries and regions in January. Manufacturing PMI picked up in Europe, the US, and India, but slipped in China. In contrast, service PMI fell in most countries, except for Germany, Japan, and Russia. Interestingly, and a little unexpectedly, Germany was the only major country that saw both its manufacturing and service PMI go up in January. Whatever this may signify, it clearly got the attention of the market. The German stock market is currently the second best performing stock market year to date, just after Brazil. DAX has been literally going up in a straight line. Investors are piling into German stocks, despite the fact that the German government last week slashed its growth forecast for 2025 to just 0.3%. Despite the fact that policy uncertainty in Germany is currently the highest among the largest economies in the world, even higher than in Canada and France. Despite the fact that German consumers are still holding back, evidenced by the big drop in German retail sales in December. If there's anything to cheer, Germany's machinery order from abroad rose sharply in December after a very tough year. Investors may be hoping that faster economic growth in the rest of the world will help breathe some life into the German economy. They may be also seduced by the fact that Germany is ostensibly cheap. The euro is trading barely above parity against the US dollar. And DAX is trading on an estimated forward PE of 16 times versus 25 times for S&P 500. Will Germany prove the market right? Or would it get even cheaper? This is the million-dollar question. The relative decline of the German economy is not news. It's been going on for the past 10 years. What is new is the pace of this decline. Since COVID, and especially after the start of the Ukraine war, the German economy has barely grown. As a result, its per capita income has been steadily falling behind the likes of the US. The standard of living of an average German is now more than 20% lower than that of an average American. Germany may enjoy higher income equality than the US, but these days, German per capita income is barely above that of Mississippi, the poorest US state, measured in US dollar and in current price. The decline in Germany's relative per capita income reflects the fact that since COVID, German labor productivity growth has been lagging behind that of other countries. Among major developed economies, even Japan and the UK have done better than Germany, and only France and Australia have done worse. Labor productivity growth is a measure of competitiveness. The implication is that Germany has lost competitiveness. This is also evidenced by the loss of market share of German exports. Since the start of COVID, Germany's share of global exports has fallen more than 1 percentage point to below 7%. Since 2022, Germany's share of global exports has fallen decisively lower than that of the United States. Why has Germany fallen on bad times? It's pretty simple. Germany has been the primary victim of US foreign policy over the past 8 years. US tariffs on China, introduced during Donald Trump's first term, forced China to accelerate its transition to higher value-added manufactured products. German exports to China, Germany's largest export market not so long ago, suffered. In car sales, BYD overtook the longtime Chinese market leader Volkswagen in 2023. In 2024, the gap between the two widened further, with BYD sales in China increasing by 37%, while VW sales in China falling by 7%. If US foreign policy under Trump 1.0 was bad news for the German economy, US foreign policy under Biden was worse. The US proxy war against Russia in Ukraine drove up the relative energy price faced by German industries. Even now, natural gas price remains 4 times higher in Europe than in the US, compared to 2 times higher at the start of 2018. German manufacturing, especially the energy-intensive industries like steel and chemical, took a huge hit, and many companies have been relocating their production to China, the US, and elsewhere. The twin shocks of increased Chinese competition and higher energy price has been more than German manufacturing can handle. A turnaround requires a decisive shift in policies. Will 2025 finally bring a new political consensus to effect fundamental changes to revive the largest economy in Europe and the third largest in the world? The moment of truth for Germany is just 2 weeks away. The German federal election, to be held on February 23rd, will decide the fate of the German economy, and given the importance of Germany to the rest of Europe, the fate of the European economy. I have little doubt that the CDU-CSU alliance will emerge with the most seats in the Bundestag. But as I explained in an earlier video, the crucial question is whether the CDU-CSU will win enough seats so that they can form a coalition government without the Greens. What is at stake is the promise by Friedrich Merz, the leader of the CDU, to build 50 gas-fired power plants to help lower energy price if his party wins the election. Merz has vowed to restore German industrial competitiveness by reversing the climate policies championed by the current government. However, in the CDU, CSU, and SPD coalition scenario, it would not be easy to push through his proposals. In a coalition scenario that also includes the Green, it would be impossible. Whereas until last week, the odds still favor a coalition without the Greens, a new poll published this week suggests otherwise. Since mid-November, the CDU-CSU have been losing ground in the polls, mainly to the populist right-wing AfD. This pushed Merz last week to make a gamble that backfired. He tried to push through a bill to toughen immigration with the support of the AfD. His decision to seek the support of the AfD, for which he's been accused of giving legitimacy to a party shunned by the mainstream parties, caused a fracture within his own party and a public uproar. Not only the bill failed to pass due to the lack of support within his own party, A new Forza election poll that came out Monday showed a drop of support for CDU-CSU and a corresponding gain for the Greens. The poll also showed the Lincoln, the left party, crossing the 5% threshold. These developments make it unlikely that the CDU-CSU will contemplate any kind of future alliance, officially or unofficially, with the AfD that also wants to revive the use of fossil fuel-based energy. And more importantly, it makes it more likely that Merz will be at the mercy of the Greens in his next government. There is no other way of putting it. What happened in Germany over the past week has further increased economic policy uncertainty, which is already very elevated. This does not bode well for the recent rally of the German stock market. The German economy has been a victim of US foreign policy under Trump 1.0 and Biden. Under Trump 2.0, it will likely get even more difficult. This is because German exports to the US have expanded massively over the past 4 years, with the US replacing China as the biggest destination for German exports. Germany's dependency on the Chinese market has been replaced by dependency on the US market. This is unlikely to be viewed kindly by Donald Trump. Indeed, Trump has repeatedly complained about the EU's large trade surplus in cars with the US. Germany will be very vulnerable to a trade war with the US. Europe could try to placate Trump by increasing its import of expensive US LNG, or by buying more US defense equipment. While the CDU and CSU support increasing Germany's defense spending, this will only exacerbate Germany's fiscal problem without solving its economic problem. Trump said this week that he was open to trade aid to Ukraine in exchange for Ukraine's natural resources. The fact that Trump seems no longer in a hurry to stop the Ukraine war could mean that the economic cost of the war will fall increasingly on Europe, especially Germany. I don't know what the market sees in the German stock market. If the election is as close as the latest poll suggests, we could yet see profit-taking ahead of the elections. The US elections last November were transformative for the US. It is not clear to me that we will say the same about the German elections. I think there's at least a 50% chance we will just end up with the status quo, namely more debilitating political paralysis. It doesn't mean that the euro cannot go up against the dollar this year, but it does mean that if it does, it will be because of dollar weakness rather than euro strength. Elon Musk said that Germany needs to move beyond past guilt, but throwing over historical baggage is always easier said than done. Thank you for listening.